Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis and insights. Today is May 6, 2025, and we're diving into Constellation's first quarter earnings report for 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Constellation, a leading producer of emissions-free energy, has just released their Q1 2025 earnings report, and there's a lot to unpack, from their financial performance to strategic initiatives like the Calpine acquisition.
Revenue and profitability overview. Let's start with the financials. Constellation reported operating revenues of $6.788 billion for Q1 2025. John, how does this compare to their performance last year?
Constellation's operating revenue increased from $6.161 billion in Q1 2024 to $6.788 billion this quarter, showing a solid growth trajectory. However, their GAAP net income per share decreased significantly from $2.78 last year to $38 this year, primarily due to various adjustments in market conditions.
And what about their adjusted earnings per share?
The adjusted EPS came in at $2.14, exactly meeting the forecast by analysts. This is an improvement from $1.82 in the same quarter last year, indicating strong operational performance despite the challenges.
Strategic initiatives and developments. Constellation has been making strategic moves, including the acquisition of Calpine. Can you tell us more about this, John?
Absolutely. The Calpine acquisition is a significant step for Constellation, combining their clean energy production with Calpine's reliable natural gas assets. This positions them as a leading competitive retail electric supplier in the U.S., and the deal is expected to close by the end of this year.
And what about their operations, particularly the Crane Clean Energy Center?
The Crane Clean Energy Center has been selected for fast-track interconnection by PJM, which is a major grid operator. This will bring new, reliable, emissions-free energy to the grid, enhancing Constellation's capacity to meet growing energy demands.
Operational efficiencies and future outlook. Let's talk about Constellation's operational performance. How did their nuclear and natural gas operations fare this quarter?
Constellation's nuclear generation was robust, producing 45,582 gigawatt-hours, slightly up from last year. Their nuclear plants achieved a 94.1% capacity factor, which is impressive. Additionally, their natural gas operations had a dispatch match rate of 99.2%, reflecting high efficiency.
And what does this mean for their future outlook?
With strong operational metrics and strategic initiatives like the Calpine acquisition, Constellation is well-positioned to continue delivering value. Their reaffirmed full-year guidance of $8.90 to $9.60 per share suggests confidence in their ongoing performance.
Key takeaways. In summary, Constellation has delivered a strong first quarter with solid revenue growth and operational efficiency. Their strategic initiatives, like the Calpine acquisition, are on track, and they continue to meet the energy demands with high efficiency. John, any final thoughts?
Constellation's performance this quarter underscores their capability to adapt and thrive in a dynamic energy landscape. Investors should keep an eye on their strategic moves and operational metrics as they continue to lead in clean energy production.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Constellation's performance in the comments below.